at now. So there's a couple of things with gold that I like and a couple of things that I don't like. But to handle this asset particularly, you're going to have to be very careful because this high and this high and this high, as many of you know, I've said repeatedly, were places where it was very easy to understand what was probable in the market, what was likely to occur. Okay. And I said it and said it and said it. It's within my academy courses, everything like that. This was a highly probable short because you've seen massive rejection every time. And within every time, this is crucial, there is a big gap between your highs and your pushes. So you've got 2020, okay, or even so back here, 2011, then to 2020, that's 9 years. 2021, okay, so you've got a year or so there, and then to 2023, this for another year. So the gap is getting increasingly closer. Now that's a problem, and it's a problem because, just like I was saying before, your fall hasn't taken you very far. Now I did call this long, and I called this short at the top. Hopefully you took profit on both trades, but now you're going to need to change your bias slightly. So I spoke as well about DCA entries from 1972 to 1982. That is now. Okay? So if you were going to short this, it is a short, but I would just consider doing it slightly lightly. And the reason why is because it's pushing up so harshly. And you can see on your hourly, all of these falls did nothing, again, showing you that it's really, really pushing up. And that is a full-bodied candle. Now, what I normally do is wait for early entry confirmation. I'm not going to go into that too much because that's in my academy. Essentially, you want warning signs that it may fall. But really, you shouldn't be buying it. Yes, it's going up. Yes, it's pushing harshly. But your job is not to jump on the end of that. Okay? Because if you jump on the end of it, you'll go off the cliff. Because if you look down here, you can see when you start rising, okay, and you look at your stock oscillator, when you start rising, the price is at 1810. It's now at 1983. It's $170 within the same month. That is extreme. Okay, that is extreme. And I would very much be interested in shorting for that reason. Okay, you are still in daily downtrend, but I would say two crucial things. Number one, if you look at the price action, it's extremely harshly pushing. And number two, if you look at what's going on in the world, okay, war-wise, people are really, really interested in flooding into things like gold. That is why I would be very cautious trading it at this moment for both those reasons. So if you do take entries, I would take it short. Okay, I do think it's a short. You're way overbought. And mainly for me, it's just the fact you've gone up for $170 plus within the week or the day of the 6th of October to the 20th. 2 weeks and $170. It's a lot. Look at last time that happened. Okay, March 23, $2,000 from 1800. So there's about $200 there in about the same period of time. Then you get a big pullback from 2009 to 1932. That's really what you're looking for again this time. And that is why I'm lightly short. But the fact that the market sentiment is so harsh for gold, the fact that the price action is so harsh for gold, I would very much consider, if you were going to reshort this with DCA entries, I would really do it lightly each time and I would really space it out. I would only go for that 2050 area, something like that, okay? I wouldn't be shocked if you beat these highs, and please do not pretend that you will not beat these highs. It's a myth, okay? It's a myth. If you notice, funnily enough, if I zoom out, you've always beaten the high eventually. I think gold will continue that, and I'm just going off the data from 1970 to now. So 50 plus years, you've gone up consistently over time. So gold has been a good investment, especially from the millennium to financial crisis when it crashed, okay? Which is no surprise because it had gone up for a significant period of time. So I wouldn't be shocked if you break these highs whatsoever. And if you're going to short this, I would do it very carefully and with caution. Yes, from a technical basis, it is a short. Yes, I do think it's come up too quickly. Okay, and if you look at every other time it's come up this harshly, it's fallen down very harshly as well. That's how markets operate. Okay, so my bias is still short with gold. I would much, much prefer to be taking lighter entries at this point because of the market sentiment. And that's why you need to read sentiment, okay? And this is something I teach people all the time because it's so important. The only thing that moves price is buying and selling. And the only thing that causes buying and selling is sentiment. It's the reason why people are doing it. And when you've got geopolitical news or you've got some kind of tensions globally, people turn to safe haven assets, things where they see them as evergreen. It's mainly because if you just look over here, it's because it's gone up and up and up and up over time. Now, when you get to the financial crisis, okay, people start buying gold because they're frightened. They pull their money out of everything else. They say, okay, well, the world is changing greatly. I'm going to buy gold and buy gold and buy gold. And that's what they're doing now. The only difference with this is the fact that you haven't had a sustained fall for an extreme period of time. In other words, this fall didn't take you all the way back to key MAs here and this support. This fall didn't do it. That fall certainly didn't do it. Okay. And this fall, well, you would expect a larger retracement, but I don't think it's going to come here because this retracement over here is so small. Okay. Your move from this high to here is tiny. It's not considerable enough. And it's what, 12%? And you're straight back up. Don't you think if it was really, really getting piled by people shorting it, it would have fallen considerably further? So really, the fact is, and I'll go on to the 6 monthly first for this. The fact is, and this is a really good illustration of it actually. If you look at gold, yes, we saw it fall here, and we saw it fall here, okay, and we saw it fall there. But what do you notice about these 3 recent falls? They're all in the space of a few years, number one, okay? You can see that there. They're all within July 2020 to now. Every single fall has been very light and hardly taken you back. Okay, so people are clearly buying it and they're not interested in selling it. Right? And you can see that there. And the pushback, okay, that we've seen most recently from here is so harsh to the upside. Now, the thing that rounds it off really for me in total is the fact that if you look at this forming candle here, it doesn't look like the other 3. Okay, it's not showing you rejection, at least not yet. It's rather full-bodied. Okay, and that's why I wouldn't be shocked if you go further up. And that's why I mentioned to just drop your size, because when you have markets like this, the risk naturally rises. If you go on your 12 monthly, I would expect a more impending fall. You did have a pullback here, but it wasn't significant enough. And I think if you get above these highs, your fall will come 2,100, 2,200, something like that. Above all, okay, and absolutely above all, you should not be buying this now. Yes, I think it could go higher, but you're far better off being on the short side and taking a big fall than taking the risk of buying now. Because if you're buying now, you're getting a bad value entry. Okay, you're getting a terrible entry for the long side because look what happens. Okay, when you buy late, you lose everything. So don't be one of those people, there's a smiley face for you, don't be one of those people who buys at highs, okay? Because naturally you're defeating the object of making money trading, okay? You're defeating it because you're buying price where it's unsustainable long term. Okay, buying at a high market is absolutely unsustainable because you're not getting a good deal. You're not getting an appropriate deal whatsoever. And often, if you buy late, you'll find, oh, it just goes straight down. Okay, so when it does come down, just to clarify in where I would like it long, I called it long here, obviously, this month, and hopefully you took it and you should be out of that now for gains. My long bias for new entries would come at the same area first. So if you do get back down near 1800, I'm still long biased. And I would just look to spread and scale in my longs as the market falls. So that would take you back to this level, okay? And as the market falls, I would DCA until you get back to your key moving averages. And ultimately, I think you'll get back to this 200 moving average. Okay, you've not been to the 200 moving average since 2003. Okay, that is an extreme amount of time. Don't think this will happen quickly at all. And I think once we're out of the woods with negative market sentiment, you'll then see you're repealing, you'll then see the markets start to fall because people pull their money out of safe havens. They're not worried about the world anymore, and things change greatly. So the long entry would probably come underneath this low near your 100 MA. I'd probably look to scale with DCA entries here, and I would probably look to lightly long there. But you would need a drastic fall for these things to occur, okay? And at the moment, rallying. Yes, I think you'll probably get a fall. I am lightly short biased on this, but if you are going to increase those short entries, make sure they're light and spread out, and also make sure you're not buying. You are just far too late to be doing it. Okay, so that's a full run over of gold, and we've covered various markets. And that is really where we are with that. Can't see any questions. Of course, if you do have them, put them underneath. And if you've enjoyed this stream, don't forget to like, comment, share. I'll be posting a lot more, and you can get my free training underneath. I'll see you in the next one, guys.